to the RationalInvestor.com's Daily Brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, everyone. Welcome back to the Frivolity. Happy Monday morning to everybody. We got a grand total of about 2 or 3 people watching this video. In fact, probably we have more people in the Hangout, in the Zoom call with us here than we have watching on YouTube. Don't see that every day. I'm going to do a little bit late, of course, getting going. Chock full of rants yesterday. I'm sure I probably alienated a whole bunch of people. But oh well, what can you do? Suppose that's the privilege you have of being a gnarly old timer. But anyway, we'll see how it goes. It's great to see actually lots of feedback. We have I think now 7 or 8 responses to our form of what kind of pain has TRI helped you alleviate in your trading and investing journey. So by all means, if you do have the opportunity, here is the form. I'll paste it in the lounge once again. And anybody who can fill it out, we'd love to hear your feedback. Also, too, we had some AMAs yesterday in the Brother Chicken show, and I think On Balance did pretty good answering those. But if you do have questions, and of course we have a after party here show following the public summary. So by all means, if you have questions, you want them answered in the after party, we can always circle around and answer those questions. So posted that in the lounge as well. Today's trade, it's Mondays. So what I highly encourage all of you to do is get into the habit of journaling every single day, everything that you see. Journal. Over the weekend, of course, I take the time, sort of review how the plan's going and can I hit objectives and what kind of money do I want to make and all that kind of fun stuff. And it's not a bad idea to take some time and go through the numbers and stuff. And working away on a Top Step combine, but really I've only taken one trade because it's really actually I had 2 valid trade setups come in so far, and one I missed because I was sick. So haven't been, in fact, I didn't take any trades last week, big 0. And did all my due diligence here this morning. I like to go through the routine daily checklist. Here is Monday, 25th of September. Getting near the end of the month here. Not a bad idea to check in on what's happening around the world before you start your trading day. German business mood deteriorates slightly. And if anything, I think that's probably the theme of today. Today is a slightly day. It's slightly up, slightly down. Not really a hell of a lot of volatility. And it's also too Monday, right? So Monday's usually kind of like a hangover from all of the options expiry business that's done on Fridays. And quite often right on the open, you have sort of a continuation of whatever that move was on Friday. Then about an hour or so into it, all the options stuff that was exercised, all those liquidations, forced sells, margin calls, whatever you want to call it, that's all done. And then the market reverses and heads the other direction. And frankly speaking, I think that's exactly what happened here today. But, you've got and keep in mind too, September, October, like if you want to take notes and learn from every single day, as I showed you, everybody should have their journals out. This just so happens to be my Top Step journal. You can see lots and lots of activity here for me today, but no trading plan setups. And remember, every single day I start off with, I am the demonstrator of best practices. So, in our education program, I basically tell you guys, you have to clearly vet out exactly what's going to get you to act. And if you don't see that, then don't act. So, I mean, there's nothing wrong with sim trading. And if anything, it's kind of fun just to keep you active. Paper trading is always a good idea to try out new ideas and stuff. But actually, here was a really good example. We're heading into the euro close, and I've seen this set up so many times. Um, but to me, this looked like a total trap. And I wanted to actually put the trade on just to demonstrate to my subconscious that this is a trap, because you often see this taking trades at trend lines. You've heard me talk to you guys about that before. And of course, here is the bottom. So you're coming in on the long side way up here, and we're coming long into the euro close. This is definitely a trap. And sure enough, that's exactly what happened. It was almost funny how this played out, like literally cliche. And I sim traded this, and sure enough, boom, stopped out. So I don't really have a problem if you rack up huge wins and losses in your sim account. You're just practicing. But actual live trading, and that's what I want to do with this combine, can only take valid setups. And as I said here, I'm the demonstrator of best practices. I'm going to use Top Step to validate all this in the public's eyes. I'm going to take all valid setups. And I just didn't have any L10 fire here this morning, so nothing to do. And I'm perfectly happy with that. If anything, I'm actually quite pleased at how this morning went. I took some trades. There was a nice winner here, I think, for about 40 or 50 ticks, 50 ticks, $250 on that little guy right there. Yeah, but just having fun, just, trading all the kind of fun stuff that I like to do in the market to keep myself occupied. And while I don't see any valid setups, what I often do is I'll actually just lock up the platform that the my live account, or in this particular case, the Top Step sim account, or Top Step Combine account thing. I think it's Quant Tower that they've got me using here. And I just put it away because I just don't see anything setting up valid here. Having said that, always on the lookout for setups and for potential trades. So this morning, I just basically go through a fairly simple routine. I always like to start off the week with, and actually interesting how I mapped out what I thought was going to happen. And it turns out after the FU, that's exactly what did happen. But start off the week with, all right, well, let's see, what are we looking at here? Sure looks kind of M-toppy, but at the same time too, we haven't quite hit this bull ABCD objective. So I wonder whether there's one more push to the upside, which actually forces our beloved divergence script to go into massive confirmed divergences. If we do get that move, we got two confirmed divs, Chaikin money flow and OBV. So it's the volume divs right now. But what I'd like to see is, you got 6 or 7 or 8 or 9 divs. It's like, wow, now that's a signal. So I would approach this as kind of like, as you can see here, I can buy against these lows, I can sell against these highs. And as we come into those levels, then, and they're mapped out on the 4-hour chart, right? That's what this is. Can sell against up here, can buy down against here. We had like a stab down into these levels, but we didn't actually hit the AB equals CD objective. So I'm still skeptical about whether this is actually a for real bottom. Like this low here did not get traded to. I was pretty close, and I even had everything all ready to go. You can see how this was an inverted head and shoulders, and the little trap trade into the euro close was there. And if anything, it just didn't set up. I mean, I had the bull divs, had 4-hour horizontal support and resistance level, as this chart right here points out. That was that level right there. And if I got a nice polite W in price down against this level, I would have completely pulled the trigger. But we just dead cat bounced straight up into this trend line, then consolidated, did the little FU move, And now they've powered her up into this ABCD into the VWAP. So ironically enough, it's kind of what I was thinking would happen, but I just didn't have a setup that let me get in there efficiently. That's the way it goes. And it's typical Monday too. I wouldn't even be surprised if this inside bar fires and then we start having to work our way back down. You can already start to see the bear divs forming. Over in the stock market, it's kind of the same thing we saw. And actually, this is an interesting one here this morning because if we look at, well, I guess no, maybe it was. Well, this is a good example of that. Monday morning, they got to finish cleaning up all the excesses from Friday. So, there is 3 a.m. my time. And there is 7 a.m. my time. So the stock market opens up at 6:30. So you can see that they were monkeying around against these lows. We had a couple interesting fog and bombs, a 2.618, a 4.669, and a horizontal support and resistance line that goes all the way back to, what is that? The middle of June, right? June 7th there. And also too, this is a really good example of this concept where I drew this trend line, boom, boom, and actually the trend line drawn off of these two highs, but you can see how it nicely corresponds with there. And then I just simply boom, boom, and then drag it back against the most recent low, which was this low here. So this, and this create this channel. And as you can see, we just tagged the bottom of that channel really nicely. So I think there were about, I don't know, let's see, 1, 2, 3, 4 different trade location indications. As you can see, I have a notation I can buy here. So actually would have been a half decent little long down against those lows this morning. It was interesting actually coming into this session. We were, at least I was, had some shorts working here, and they were working quite well. And then all of a sudden, like I said, about 7 o'clock or so, 6:37. I think it was right on that econ release we had at about 7:30 Dallas Fed. The market, we actually had a top working against these previous highs overnight, and I was working a short. And then all of a sudden, the market just took off like a rocket, and you can see it stopped me out here for a small loss. So didn't really get anything set up here for me to hunt longs this morning. But having said that, with all the, and keep in mind, these are sim trades. I'm not even trading ES in the combine. So I'm not going to, this is just purely paper trading. I was having fun in the market here this morning. So, kind of a mixed bag, some wins, some losses. I was quite surprised to see that violent reversal there. But if we actually look at some of the stocks, I think it kind of makes sense. I mean, the first thing that I talked to you guys recently about was NVIDIA here. It was kind of the market darling of late. And I think we did come down into an important level there into the options expiry. This is a really good example where they say that most of the options business will actually be done on the Thursday. Then the Friday is actually really quiet. It's a really almost dead day. And what a perfect analogy of doji there. So they opened up NVIDIA, brought it back down against the lows, and then cranked it back up here. And, I mean, our basic rule about trading ranges is we should expect at least a 38.2 bounce at any given point in time, which would be nothing more than maybe a test of this pivot. You can see pivot low, pivot high, this thing gap lower, and then rallied all the way up into this level. So, you might even want to, on your charts, just draw a nice little high to low trend line there. And my hunch is that's probably where short-term resistance comes in against that 38.2 there. We could probably also throw on some moving averages and stuff, probably give you an idea of, I could do that on another chart. One thing I have to learn to do is actually load up all these charts and have them all ready to go before I do these videos. I noticed that doing them in real time charting just, it's not very efficient. So something I have to work on over time. This trend line in particular was drawn off of just some structural lows here. Higher highs and higher lows. It is interesting to see how the market did bang into that trend line there. And of course, our little head and shoulders thesis would suggest something maybe along these lines. So I don't really mind that as a bit of a pivot. And interestingly enough, like we said, dead cat bounce. I think you're probably going to see this thing jump up into 38.2 levels, probably up into here. But my hunch is that over probably the next couple of weeks, I think people had pointed out that China put in an outside upside key reversal on Friday. So, maybe the market can enjoy a week or two of reprieve from all this selling. I wouldn't be surprised if you see something along those lines. And then, into, the end of September, getting ready for October. October is usually, the test low, and do we actually punch lower? Remember, October crashes and all that kind of stuff. So I wouldn't be surprised. I don't know if it's going to be this violent or not, but I wouldn't be surprised if our future looks something along these lines here. So, looking at that 38.2, going back up, that's what that level is there. But if we also do like the whole kit and caboodle, yeah. So actually, I'm getting pretty good at this eyeballing this stuff. If this is indeed a head and shoulders top, then you're probably going to get some sort of test of that level there. And if this is a head and shoulders, you would expect this not to take out that high. And also you see pretty big gap right here around good old Mountain Man. And I suppose, for all the, I think the, what do they call them? The fair value gap, something along those lines, that ICT guy seems to be pretty popular these days. I might suggest that you can see there's a bit of back and forth against that low there. And then a bit of back and forth against this high here. So my hunch is that if you were going to do that fair value gap kind of conversation, it would be right into that reload zone. Pretty cliche. We talk about, having multiple reasons to justify taking a trade, confluence of levels. You've probably heard me make reference to that before. And I do believe that there are a confluence of trade levels up in this window up here. Not here. If anything, guys who are going to be buying against the bottom ends of ranges, keep in mind that that was a pretty powerful key reversal low. There's obviously quite a bit of demand for this asset down in this level here. I don't think shorting here makes a lot of sense. So if anything, looking at that chart, hopefully that gives you food for thought. Also, too, you can just draw a really simple trend line, right? Just like connect the dots. Boom, boom. Oh, hello. Talk about confluence of levels, eh? Damn. So there you go. That's my gift to the interneting right now. Is damn, that's a hell of a level right in there. But here, no, I don't think that's a good place to short. And it's not a bad idea to watch the market darlings, because usually they say that when the market darlings start puking out and everybody starts getting embarrassed and bearish and stuff about the market darlings, and oh my god, I must have made a terrible mistake buying this, that's usually when the market wants to pivot. Also too, I think it's interesting if we circle around. Tech usually does poorly when oil prices are rising. And this probably should be a good short that maybe Chris and I work on Wednesday, is when oil rallies, tech usually does poorly. Why? Because purchasing managers only have so much money to spend. And especially if you have tech, NVIDIA, lots of companies are going to be buying NVIDIA equipment. Especially, I suppose, with AI, and you're probably going to have a lot of companies exploring that alternative. So the point here is that when oil prices are rising, purchasers managers have to allocate more of their budgets towards energy, fuel for the trucks, heating oil for the furnaces, electricity for the lights, et cetera, et cetera, et cetera. And so they have to pull money out of other things. Okay, maybe we won't invest in this AI chips and stuff like that, and then put it off for now. And so tech stocks usually fall. And then the exact opposite. When oil prices fall, companies say, well, maybe we should start thinking about putting money to efficiency. And tech names start to catch a bit of a bid on anticipation of sales. Also, too, I would say that the iPhone is the iPhone 15. I just noticed, and I've told you guys this before, I think a really good way for you to judge whether assets are going to do well, stock wise in the market, moving up, moving down, is just ask yourself whether companies are advertising and whether they're getting their name out into the public. And I noticed as soon as companies start advertising in earnest, especially on platforms like Google, that YouTube platform and stuff, something's about to happen. And so it doesn't surprise me. We had a ton of bearishness coming into the market down here. Remember, we had like FUD about the Chinese government was going to outlaw the use of Apple products by their employees. And then people actually went around China and said, well, these government people are still using the iPhone. So I don't know what's going on here. And it turns out that that story was written by some some sort of anti-CCP blogger guy, and it was all just phony baloney. And then why? Because probably they wanted to knock the stock down and see if they could get it as cheap as possible. And now when I like load up YouTube and stuff, oh my God, it's just iPhone this, iPhone that, titanium this. And what's really interesting is that Apple doesn't actually even have to do any of the advertising. It's all the telephone carriers that actually do the advertising and sign up for the new iPhone 15 and for a 2-year plan or whatever, and we'll give you the phone for free. So, in a weird sort of way, Apple's got just an absolutely fantastic marketing plan here where they just let all the telephone companies advertise their product. So, it doesn't surprise me to see Apple rallying here. And, I mean, W's are W's are W's. If this thing perks up through the top here, we all got to start thinking about some upside objectives, right? And interesting, 2.618s. Good old Foggenbaums is just going to be nothing more than a test of the previous highs here. And, to sort of reiterate and come full circle on all of this, what does BlackRock and Mr. Fink wants to fucking take over the world? I mean, what is his biggest holdings right now? It's Apple, it's Tesla, it's Palo Alto Networks, it's ConocoPhillips, and it's Broadcom. And I mean, do you really want to fight Mr. Fink? I don't know. That's a tough one. So it doesn't surprise me that Apple's actually now catching a bit of a bid. How far this thing can actually go? That's a tough one. You can see that there is, same sort of logic with NVIDIA. And then we said that the chaos level would take us up into these highs. Sounds to me like we're starting to get some confluence of levels. And you might argue, your fair value gap guys, probably that right there is the sort of previous range. And this right here is the top of this current range. So there is your fair value gap right in that window there, right up against that trend line. Interesting to see, of course, with these gaps still open here. Technically, they should be filled in. So, down the road, I mean, it might take 6 months, might take a year for that to happen, might take 5 years, who knows. But should we actually see, and let's go full circle here. And what does that Chinese outside upside reversal look like? I don't think it's actually confirmed yet. What the hell is the damn symbol? I thought it was oh, there it is. And actually, this thing doesn't look like it at all. I think it was the Hang Seng. Yeah, caught flat-footed again here. Hold on. China trade. Here we are. Let's open up that. Um, I don't think that this is actually broken out yet, and it makes sense why we don't see things like Tesla and or Apple and Nvidia and stuff actually spitting out buy signals just yet. But I could see if, and it's a big if. I think what's happening today is sort of a hangover from options expiry and the market, on its knees and stuff, maybe a little artificially so. But you can see somebody had pointed out that, hey, maybe there's a potential key reversal that could fire here. Now, remember, the key reversals only confirm when we go through this high. So that high was 18,078, and today's high here, 18,046. So here, and actually, I think you could probably make this really easy on yourself. This is what I like to call the bull bear battle lines. So we know that key reversals are extremely powerful. And also you can see 13 EMA resolution. But at the same time, too, this is now a bearish harami. So a move through this low overnight, like tomorrow, will actually trigger a sell signal. So, if you want to, all you China followers, China lovers and stuff, you want to follow whether they're actually going to get their act together and clean things up and actually get back to business. I think you have a really, really simple window here that's going to dictate. And if you want to just use it, make it simple and use the actual key reversal bar, if we break through this low, then you absolutely know that we are melting down further. So actually that makes it really, really simple. All right. Thank you, Chris. So what's some other sort of supporting arguments for why we're seeing what price is doing today? I might actually argue that, on top of the fact that we had the options expiry sort of hangover, market opens up lower, then rallies back once the sellers are exhausted. And you can see, I mean, in fact, the Dow was actually heading lower nicely here this morning. And then all of a sudden, we just ratcheted right around and turned right back up. Probably, typical Monday trap kind of trade. You can see the leaders here. They are the tech stocks. It's interesting to see oil firm here. Tell you, I think oil looks like it's topping out. Why do I say that? If these tech stocks actually start performing here, another sort of, first off, the oil ETF, this thing's starting to look kind of toppy, eh? So what are we supposed to think if we ever see the market smiling at us? So you can see that it's potentially coming in there. So keep an eye out for that double top up there. But also too, some interesting screener results. And of course, this is why I think that the platform that we built is so incredibly valuable and powerful. Let's see where I can show you this. I don't know which tab it is. Can I, right? Screener signals. And actually, I even tweeted this out. I mentioned it in the Broiler Chicken show. We did have a bunch of sell signals, key reversals come in on the oil stocks. And they always say stocks always lead commodity. So you can see Halliburton, that's one of the biggest oil companies around. Big old fat outside downside key reversal. So what does that actually look like? And actually, I don't want to screw this up. Let's, where are we going to do this? Let's go over here. So Halliburton. This is Dick Cheney's old company. I don't know whether you guys are old enough to remember Dick Cheney. Look at that sell signal. Holy crap on a stick. And like I said, I mean, this is, if there was a reason to subscribe to TRI, I think we're going to charge you $1,000 a year for this key reversal system. You could easily make $1,000 on this short here. And in our secret options formula club, we are kicking around the idea of like a bear put spread. In fact, I thought I had this written up already. Maybe I'll talk about this tomorrow in the after party. But the point here is oil stocks, oil, and especially oil services companies, they're often a leading indicator in the market. They often lead the commodity. We showed you that USO chart looking very toppy after a huge run here. I mean, could we mess around up here a little bit, maybe run some weak stops, that kind of thing? Possibly. But the oil stocks themselves spitting up huge warning signs that there's trouble. And actually, I think even that ConocoPhillips, it was kind of looking toppy as well. Yeah, look at that huge bearish engulfing bar. Kaboom. So there's warnings that maybe oil might be nearing an end. Last thing I'll say here is why did the stock market actually jump up here this morning? And actually, you can see Bitcoin's catching a nice bid here. I think actually I noticed that the bond market actually caught a bit of a bid here first thing this morning. And you can see that bid is kind of evaporated now, but especially off of the 2-year note, this is sort of the, hey, run for the hills, get me out of all the risk assets. I'll park myself in US Treasuries. So if these guys' prices are moving up, then that means that capital must be coming out of the risk off and going into risk. Now, off the daily chart, that's not really anything to get too excited about yet. But first thing this morning, why did the stock market rally? I think it was because they started to see these bonds start to move back up. Now, it's interesting, just even over the past hour or so, you can see that bond market is kind of losing steam. And I wouldn't be surprised if risk assets start to lose steam too here. I mean, these things don't look like they're trending higher. I just think, as I had said earlier on, what this really is just sort of a relief rally, dead cat bounce, whatever you want to call it, on the idea that there was a lot of downside pressure coming into Friday, the options expiry last Friday. And the margin calls were done, they were over. And there was a bit of a vacuum in the market and path of least resistance. I was quite surprised. In fact, actually, why don't we leave the free broadcast at that? Maybe we'll talk a little bit more about commodities in the after party, and then we can always pop on over and take a look at the corn. I've got, oh, interesting. Look at that. So I did have a short working, but actually it's off the screen now, because I had the move stop to trailing level on my bearish bot. Boom, 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 boom. You've probably seen this 100 times from me. So I want to get short from these levels. You can see there was one short entry filled. There's another short entry filled. And I used, we had move stop to trailing level hit here. Overnight, things were looking very sanguine. But again, was that a function of maybe the market was just a little bit oversold through that options expiry on Friday? Dead cat bounce. I use the 3 high-low method here. In fact, actually, all you level 3ers, I'm teaching this terms level 3 program. We'll be talking about this tomorrow. Really good example of how to try and sort of stay in a winning trade as long as possible. But 3 high-low, boom, 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 boom. I'm officially stopped and out of that short. So we'll see what happens there. Interesting. Okay. Yeah. So I think we'll probably leave that. Let's head on over to the after party, and we can talk lots about what else we're seeing in the market. And if you have any questions, feel free to ask, and we'll do a bit of a Q&A as well. All right. I don't know whether that gave you guys any value over there on YouTube, but maybe let me know. Hit the like button if you liked what you saw here today. Comment, give me some feedback on whether you're seeing similar levels, that kind of thing. And by all means, if you can, come on over and join us for the after party, and we'll have a nice little chat here momentarily with the community. All right, have yourselves a great day. PMA for the win. All the best, and bye for now.